Sanlam was established as a life insurance group in 1918 and has expanded its services to include short-term insurance, estate planning, loans, capital markets, and all forms of asset management. Sanlam has a market cap of 85 billion rand, a price-to-earnings ratio of 15, and a dividend yield of 3.3%. So what is the discount to embedded value? Let's sound really clever here.
So it just means that the share price trades lower than the embedded value that we spoke about.
I'm saying, so what is Sanlam's discount
so
to embedded? I've got that already.
Yes,
I know I'm a little slow, but I've mastered that piece.
So Sanlam is actually trading at a slight premium to embedded value at the moment. The last embedded value was at the end of June. We're almost 5 months away from that now. So it's trading probably at around a 5 to 8% premium to embedded value at the moment. And that implies that people think that the return on embedded value will be above average. That could be the case because they are the most boring of all the insurers. They said no to a lot of business. They only wrote business if they thought that their experience will be in line with their actuarial assumptions. So they do not have a problem with persistency, with people not paying their policies, that some other insurers do have. That means their return on embedded value is higher, and that therefore would mean that they are justified in trading at a premium.
The most boring of the companies, as Jean-Pierre puts it?
In the risk business, boring is good because, as JP says, then you're less likely to write business that comes back later to bite you in the bum. So that's fine. They've, of course, got a big interest in Sanlam. They did right by staying home. When Old Mutual was embarking on its various adventures, they stayed at home. So that capital base, which they've aggregated over the years, has really now been applied. They've got quite a nice business in wealth and asset management. They're in private client. They're in insurance, all elements. You know, Sanlam is quite a major player, and they've got the controlling stake there. They're now beginning to tentatively look at other emerging markets like India and so on, where they feel they can take their model. So that's all fine. Long term, there are always going to be people who don't want to manage their own savings that are going to go to people like this. So I guess there's a place for them in the world. And look how well they've done. So,
well, let's just have a look at the share price graph. Around about 42, isn't it? Hitting 40, 42, peaking at 42 at the moment. That's obviously an all-time high on Sanlam.
Yes, it is. And you can see that going from a discount to a premium to embedded value happening in the last few months. That is also on the back of the boring company becoming a bit more exciting with the Sri Ram acquisition in India. So that's why a lot of optimism with Sanlam.
The risk to the downside here?
Look, understand the business model here is twofold. You make money from a risk underwriting, and you do well in years where you kind of contain your payout ratios relative to expectation. You also do well when your statutory reserves, which the regulator obliges you to hold, do well because the market does well. So partly why this chart looks good is because we know equity markets have done well in recent years. So that means there's a surplus created in the statutory funds, which are then releasable and come into earnings. So that's all fun and fabulous. The downside to insurers mostly is that they have that market cyclicality. So if the market takes a big crash like it did in 08, 09, then you're going to get your head handed to you
and
here.
Vice versa,
That's
if there's a big
goes.
rally, you get a big boost effectively in your underlying earnings.
Exactly, and that is exactly what has happened. So if one is a bit nervous about equity markets, you would probably want a lower level. You don't want to pay a premium to embedded value because there is a risk of lower equity markets and therefore lower earnings.
One final point. I was talking to Patrice Motsepe, who is like a 10% investor in Sanlam. They got their shares at 8 Rand a share. Now they're at 40. Imagine how happy he is about that investment.
Did he say he was still holding them?
Yeah, they've got a deal whereby that stake is locked in for another year or so, at which point it becomes voluntary. But his observation is that Africa is obviously an undersold market for insurers, and that must be true because there are a billion Africans, and I can assure you not many of them have got life insurance in the bigger picture. So that's the opportunity. It's there to provide, you know, mainstream life cover and other savings policies. There's plenty of business to be done. Again, my only question is this the way to be invested in the growth story that is Africa? Yeah, maybe. Why not?
Jean-Pierre, Africa as the opportunity for Sanlam?
It is an opportunity together with India. Like I said, they ventured into that market most recently. But there's probably a price to pay for growth. If you already pay up for growth on day one, you won't see it in share price movements going forward. And I think that could be the case with Sanlam at the moment.
Hot or not on the Sanlam, Paul?
I'm tempted, but I'm going to go again with not hot.
At a premium to embedded value, you are tempted. I think you've got this industry wrong. Hot or not, Jean-Pierre?
Because of the valuation levels, I have to say not hot. Great company, but too expensive for me.
I'm in your court.